Hare Krishna. Am I audible? Am I audible, everyone? Can someone please confirm?
Yes, Prabhuji.
Okay. Thank you, Mataji. Hare Krishna, everyone. Thank you so much for joining today's JNS meet. Uh, and I welcome you all for this Nityan Sabha meet, which is we are having after a very long time. Since we had a Parichaya Sammelan, the team was busy with that. And today's NS meet is going to be very special. We have two guests with us, His Grace Atmanam Gaurang Prabhu and His Grace Vrindavan Kumar Prabhu, and we will be discussing about finance. So this will be kind of a podcast style session where His Grace Atmanam Gaurang Prabhu ji will be asking various questions to clarify fundamentals of finance and investing. So this is going to be a very wonderful session. I think everyone knows His Grace Atmanam Gaurang Prabhu, but still, I will like to introduce Prabhuji. Academically, Prabhuji has done his engineering from Kurukshetra University. After that, he completed his MBA and PhD from Indian Institute of Foreign Trade. And since that, he is working with TCS in various roles from last 16 years. And he has played various responsibilities there, like consulting, innovation, and now working as head of the sales. On Krishna conscious front, Prabhuji came to Krishna consciousness in 2005 after reading Bhagavad Gita, and since that time, like it is like last 19 years, he is practicing Krishna consciousness and contributing in various capabilities to our Krishna consciousness movement, which involves like preaching in various colleges like IIT, POI, BJ Medical College, and other so many things. He is guiding various Grihasthas also, so that we can, while doing our responsibilities in Krishna consciousness, we can successfully uh, proceed ahead in our devotional service. On family front, Prabhuji's wife, Her Grace Leela Radhika Mataji, is a dentist, and she is working in BMS school in our NVCC Pune. And the main role which Prabhuji is playing is coordinating Nityan Sabha. So since last 2 years, Prabhuji is guiding us, and whatever programs you see, like recently Parichaya Sammelan, this monthly NS meet, then we will be having NS camp also. So Prabhuji is the main guiding force who is guiding us on various aspects, and he is very particular about all the details so that we can serve you all very nicely. So we are very grateful to have His Grace Atmanam Gaurang Prabhuji, and we would like to welcome Prabhuji by 3 times loudly chanting Hari Bol, Hari Bol, Hari Bol. So I would like to now hand over to Prabhuji. Thank you so much, Prabhuji.
Hare Krishna. Thank you so much, Sachin Prabhu. And maybe if you can spotlight Vrindavan Kumar Prabhu and my videos so that we can. So I'm very happy to welcome all of you and happy to announce that we have now over 1,000 devotees in the NS group, All India NS group, and we hope that youth all across ISKCON they take shelter of the grahastha training which we are trying to provide so that all of you can have very smooth journey in your Krishna consciousness. That's the intent, and in the balanced way, if you can proceed, and then you will be able to contribute a lot to Srila Prabhupada's cause and mission. So that is the intent, and so today only we saw that it's over 1,000 devotees. So thank you so much for all your love and support to for putting a faith in the Nityananda Sabha forum. As we continue to train devotees, we have been always talking about different aspects of the balance grahastha life. One's sadhana, one's preaching, one's hearing, one's relationship with the spouse and the kids, and one's own health, and association of devotees. And then there is one aspect which comes as the job. and the financials. Okay, because we can't deny the importance which money plays in the life of a devotee. Okay. His Holiness Mahavishnu Goswami Maharaj used to say that money brings mode of goodness also. Because let's say there is no money, we are always anxious, where is money, where is money? So the goodness doesn't come. Okay. So it's a beautiful perspective. While we have to be careful, we know Kanak Kamini Pratishtha is something which we have been asked to be careful about. But we have to be careful about if we go mad after it, no greedy and not goes above our head, then otherwise if we can learn to use it gives a good support to our Krishna consciousness. So with that as the intent, we keep having different seminars, different topics, to ensure that all of you become very strongly rooted in these different pillars of balance which I just told. Okay. Also, is it going live on YouTube, Sachin Prabhu? Because there will be soon 100 will cross and then it will be a problem.
Yes, Prabhuji, we are streaming it live. I will share the link.
Yeah, sure. Okay. So on continuing on those in that spirit, we are here welcoming no His Grace Vrindavan Kumar Prabhu, who is my very good friend as well, and he is the counselor of His Grace Gaur Gopal Prabhu, and he joined his group in 2006, and he has been assisting Gaur Gopal Prabhu in various ways, and he has helped set up Yamuna Kinara in Radha Gopinath Temple for investment and banking services for devotees in congregation. He has been initiated by His Holiness Ravana Swami Maharaj, and he is very very prolific entrepreneur as well. Okay, and he has led various no financial initiatives. So that's his devotional side. Now I'll talk about the credibility on the. So he's a second generation devotee. His parents were also devotees, so he is also following the footsteps of his parents. He accepted devotional life, and he manages a financial services training institute and wealth management firm that manages 450 plus crore rupees of wealth of 2,100 clients. So that's the asset under management under Prabhuji. And uh, he's he shares in close association of Bombay Stock Exchange. I have been to his office. BSE is quite visible from his office, and like no, and he has a large office. Sometimes I wonder to get a 4 by 4 square foot shop, like no shop in that area fort where Bombay Stock Exchange is like matter of several lakhs actually. And that Proj is having a big office, having a big team. So that shows that there is so much trust which many people have put in his financial acumen. It's a family business, and there's a lot of his family members are involved in it. And he has done very professional courses and done a lot of partnership with a lot of people to come out with the products which are in the area of debt equity, so many things. Okay, so we'll be discussing all these things today. And thank you so much, Vrindavan Kumar Prabhu, for coming to Nityanand Sabha meet. You were there in the camp last time, and I know that session became a hit. Many devotees flocked you for for hours after that. So we thought it's a good idea that no we no we have you in this session again, and take your valuable advice in this very important area of uh, of financial investments. So thank you so much, Prabhuji. Uh, and we will maybe you can just maybe if you want to speak for a couple of minutes and know how you feel about NS, what was your experience, and then we can start off with you know uh, we thought we'll keep it like an interactive thing so that the time is short, attention span is also reducing nowadays. So we'll keep it like a podcast kind of way so that I hope that some of your questions will get incorporated in it, the way I keep talking to many of the youth devotees. So I'm trying to represent all of you, but yet after this also you may have questions. We'll open the forum for all of you to ask questions also. So here we go. Yes, Vrindavan Prabhu.
Hare Krishna Budi Dhanwar Pranam. Thank you so much for your kind words. Yes, in fact, the in the camp last year, it was great. It was good to see that actually the audience was already very well aversed with investments, and they were already doing already they're taking steps towards their financial independence, towards their financial freedom as we speak. And like you said, it is very important that that of course, while all of us are busy with our lives, with our sadhanas, with our different commitments in life, but at the same time, if we give little importance towards savings, towards investments, it can go a long way to help us ease the anxiety later on with respect to our you know expenses, with respect to our retirement. And most importantly, if we plan early, and we've seen that you know devotees, and even not even devotees, like even people outside who are just not practicing any spirituality, but if they plan early with their investments, they can retire early, and then they can focus on their lives, whatever dreams they have, whatever passions they have. And of course, in our case, we can get more time to do seva, which is ultimately what we're supposed to do. So, and in fact, it was very, very encouraging. And like I mentioned to you, I'm happy to be a part of this and happy to guide anybody who needs any kind of advice in this space, because finance, financial investments can get tricky. They can get a little, every time there's a lot of noise and a lot of misinformation that is also being spread because of advertising, because of commissions, because of people having ulterior motives. So the idea is to remove all the noise and focus on what is really important and what is ultimately going to help us, and not the investment agent, or not the mutual fund agent. I'm sorry to say that, but unfortunately, a lot of people sell products for their commissions, you know, which is not be always in the interest of the investor, right? So it's important that we are self-aware. Ultimately, it's us who will be having the most, I would say, rather, it's we ourselves who should be responsible for our own financial freedom, and not our financial agent, right? So we should, and sessions like this is always helpful, I believe, for anybody who is not in the space. Everybody is busy in their own careers, but these sessions are always helpful to get certain things right. If anybody has already started doing some investments or not, we can always start from. It's never too late. So yes, I think with that we can. I think this is a great idea of doing a podcast, so it's more interactive,
Yeah,
and then we can open the floor to people who are who would like to have any questions they have. We can then take their questions also later on.
perfect. Sure. Thank you, Proji, for setting the tone right. So I'll like to, because it's a devotee community, and everything we want to start, we want to start with a proper consciousness. So I want to understand what is a proper consciousness for investing. In the sense, we see sometimes, everybody wants to kind of retire early, or maybe have money so that they can get more time for services. uh, so sometimes we see that this factor that very quickly retiring. So sometimes somebody may get into some very utopian ideas of investment also. And also sometimes people realize it quite late that I would have saved more money and all those things. So I've seen devotees who have been working in US for like 18-20 years. When they come back to India, they don't have anything. They still have to go for a job. So I want to understand, know what is the right mindset for investing. If you can talk about that mindset, so that all of us can reflect whether I have that mindset and align ourselves according to it.
Right. So I think as we all know that if unfortunately in this material world, right, in today's day and age, it's impossible to survive without having a good financial income, right? We'll always otherwise conscious, always be anxious, and our mind will always try to be ki how can I find a better job which is going to give me more salary, or where is the next opportunity which will take care of my family's expenses, because I'm presuming most of us here are in the Grihastha ashram or plan to join the Grihastha ashram sooner or later. So there are the realities of of of, of certain expenses. So coming to with respect to consciousness, right? I believe if we understand that okay, financial or savings and investments should not be done, or we should not try to earn money in a speculative manner. Rather, we should earn money with a long term investment mindset, right? With the idea ultimately for our own financial well being, and ultimately helping us, helping, like we say, we are working so hard for our money, but is our money also working hard for us, right? So that if we if we if we can plan this savings aspect very nicely, it will bring, like you said, it will help us move out earlier from the mode of rajas, which is constantly trying to earn more money for expenses, and it'll shift our mindset to a more sattvic mode, because now that we are aware that we have enough of finances, enough of savings in our portfolios, it can help us live a comfortable lifestyle that we intend to do, right? Otherwise, what happens is, unfortunately, as devotees, I've seen when as a financial advisor, when we advise families, right, there's a stark contrast between helping a devotee family with financial planning versus helping you know a person who's not understanding the basic concepts of spirituality, or following some sort of you know uh, process of devotion, because naturally devotees have a very low requirement in terms of their expenses. The denominator, as we say, right, the denominator of the expenses is so low that people, we just do some basic investment planning ideas, and they realize that okay, in the next 15 years, in the next 12 years, they can really retire. And fortunately, we don't have these big fancy ideas that we would like to buy a expensive sports car, or we want to travel the world, in terms of fine. uh, most of our energies are
Vrindan, bro,
already.
somehow your voice is slightly inaudible, and I think the connection is not that. I mean, it's not coming very clearly, seamlessly.
Okay, what I'm
Audio
going
is
to do
sometimes
is,
lacking.
okay,
Yeah.
I'm trying to let me try to sign in from my phone.
Yeah.
Let's see if that is better.
Sure. Sure.
Hare Krishna, Hari Bol. Is this better, Prabhuji? Is my
This
is
is
it
amazing. Yeah. Yeah. This is
okay?
really good. Yeah. Yeah.
I'm sorry. I think the Wi-Fi connection may be low.
Yeah. But we are not able to see you. Huh?
My video is on.
Who is it? Huh? Uh, no. No. Your video went off. Huh? Oh, your video is on. Huh? Okay. Fine. Okay. Good. Good. Yeah. This is fine. Yeah.
Okay.
Of course, we are
Sorry.
seeing a smaller version of you, but then yeah, better.
I'm sorry
It
about that.
is. Yeah. No worries.
We have
Yeah.
to we have to we have to probably change along with the times. If
Yeah. Yeah. Sure. Yes, Prabhuji. Yeah. Continue.
Yes, so I was just saying that with respect to consciousness, I believe fortunately, our congregation and our devotees already have the right mindset,
Mm-hmm.
right? And if they and and I've seen like I was saying, that most of the devotee families that we advise,
Mm.
they also automatically because the like I was saying, the expenses are naturally low. There are no fancy expenses like, you know, uh, like buying expensive cars, or even traveling, having high expensive budgets for traveling, right? It's very simple yatras, and having enough money to sustain having a good sattvic lifestyle, simple living, high thinking, which Srila Prabhupada instilled from the from the time, from the initial days. So I think the mindset of our congregation is already right.
Mhm.
And if they just realize that while they are working hard for their life, for financial freedom, if they can plan their investments better, not get carried away by short term, short term profits, or short term, or get quick rich schemes, right? Then it just it will financial planning and investment is a very simple and a very smart process. There's a very famous quote I would like to just end, by saying that there is a quote which says by Howard Marks, who is one of the renowned investment managers in the US. He says, when there is nothing clever to do, the smart thing is doing nothing.
Yeah, that's how most of the RBI monetary policy committees no outcomes come, like no do nothing, and it's a great meeting, you know.
Right.
Yeah, great. Yes, Prabhuji. So thank you so much for that. And in fact, the point which you told that no, the investments, if you plan nicely, anyways, our expenses part as a devotee is very much settled. You know, we are kind of, that's a blessing. Which we have gotten by this lifestyle of devotional life, that our expenses are more or less managed. But then what happens is the investment strategy, and this is where I want to go deeper a bit.
Yes.
That no, typically, what happens is that no, sometimes we tend to invest only for long term, and only long term, considering our long term goals of I'll retire after 15 years, I'll retire after 20 years. And then what happens is that no, then suddenly, there are certain, I mean, with the changing phases of my life, the expenses keep increasing. Then, somewhere there's a rift which keeps happening, within our own selves, with the families and all, because we have over invested for the future and we miss out on the present. Okay. So that is one thing which we have seen. So that's where the importance of goals come in. So
True.
can you, like, no, I mean, if I were to, like, no, we always do that in our corporate life also, the short term, medium term, and long term goals. So
Right.
is there a way by which devotees can strategize and first of all recognize that there are short term goals we have, there are medium term goals we have, and there are long term goals which we have?
Right.
So can you define from investment perspective the horizon or the timelines of this short term, medium term, long term goals, and what typically are the instruments which they can use to, let's say, facilitate their short term goals? Because everybody will be having, let's say, going for a yatra is probably a short term goal,
Right.
my next year yatra, and buying a car maybe a medium term goal, long term goal maybe buying a house or whatever it may be. So because you're getting my point, right? So the goals, what is the horizon from the investment perspective, and what are the instruments in the market which are not speculative and also help devotees achieve these goals?
Perfect. So first, let's look at what is considered generally in the investment landscape. What is considered as long term? What is considered as medium term and short term?
Mhm.
Right. So if a goal is less than 3 years, if you know that you need a certain amount of expenses to be done, or a large amount of expenses expected to happen in the next 2 to 3 years, anything less than 3 years is usually considered short term. Medium term is between 3 to 5 years or 3 to 6 years, right? And anything above 5 to 6 years is considered long term, usually.
Okay.
And if you see, this coincides very well, a long term goal coincides, it kind of mixes very well with the life cycle of the stock market.
Mhm.
And why I'm coming to stock market is because I'm presuming that most of the people here are doing some sort of investments as mutual funds in the form of SIP, right? And they have some equity, which is some investments in mutual funds, which is linked to equity and the stock market. And if people who have planned, and I'm sure a lot of people would have seen who started investing in the last 2 to 3 years, how a bull run in the equity market can really create a good amount of wealth. So a long term plan and a equity. So coming back, the equity cycle, if you look at the past 20 years, 25 years, 30 years, our equity cycle generally is lasts for 6 years. So every 5, 6 years, a new bull run happens, right? So if your investment is long term, right, and if you invest in equity, you are safe. I mean, there's it's I would say, because we have seen that time and again, that any investment, any SIP over a period of 3 to 4 years is risk free. So a long term goal linked to equity is great. But the
Mhm.
mistake what people do is that they have done the investment. Say now, assuming we are in 2024, right? Now somebody planned for an expense, or somebody planned to retire at the age of 2020 in the year 2025, which is next year,
Mhm.
right? And the portfolio has been growing steadily. What people fail to do is, when the goal starts coming nearer, they don't shift the money from equity to a instrument which is much more stable, or which is fixed income or a debt oriented fund, right? And then unfortunately what happens, when the time comes, that is the time when there's a correction in the market, right? And then all your saving which you had, right, is down by 20%, 25%.
Mhm.
So what we do is that it's important, we 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 should be conscious that, okay, now our goal that we had planned for, right, it has come to the corpus that we have wanted to achieve, and we should shift it from a investment horizon, which is a long term. So equity mutual fund is a long term investment plan. We shift it to a medium term or a short term investment.
Okay.
And some of the medium short term investments are your your balanced, I mean, in terms of mutual fund parlance, it's your balanced mutual funds,
Mm.
right? uh which have equity and debt, a mix of that.
Okay.
Or you can, if the goal, okay, I need the money in the next 1 year, then you can shift completely into a debt scheme, which effectively invests in bonds, which invests in debentures of companies, and they
Okay.
give you, and that, okay, now, my portfolio is is almost there. I've achieved the corpus that I wanted to achieve, and I can shift it into a portfolio which I know in the next 6 months, 1 year, even if the markets are volatile, even if they go up and down, my investment will not break.
Okay. So what essentially you are saying is that no. Okay. So first, let me summarize this a bit for devotees over here. That what you're saying is short term is 0 to 3 years, and then 3 to 5 years becomes the medium term, and anything above 5 years is a long term thing from the equity, from the investment parlance,
Five
and
plus.
5 plus, and yeah, greater than 5 years. Okay, it may be 10, 15. And what you're saying is over long term, equity is risk free. Okay, which is considered to be risky, but it is actually risk free, because the cycle, and averaging out and all those things kind of takes care of the inherent risk which may come with the equity. But one has
True.
to look at it from the long term perspective. Okay,
Absolutely.
and what you are also mentioning is when one is getting closer to one's retirement. Okay, then a year before or so, one should liquidate that and move to the debt instrument so that one can be immune to the market condition changes, which may be debentures or which may be bonds, all those kind of instruments, right?
True. Whatever, it can be retirement, it could be a goal of buying a house, it could be a education goal, it could be a marriage, whatever.
Okay.
As and when the goal comes nearer, you
Hmm.
start withdrawing your money in and shifting it from equity class to asset which is much more less volatile.
Okay.
Because
Okay, great. Yeah, so this is a very important point that now when my goal is getting reached, before that, I move from equity to the debt kind of instruments so that I'm getting ahead. So it may be any kind of goal. Now, what about that 3 to 5 years, the medium term? You told about the hybrid kind of funds and all those things, right?
right.
Yeah, so can you elaborate a bit more on those hybrid funds?
So broadly, if we see, there are three sorry, there are two types of asset classes that people invest in or that are available in the market. One is equity,
Mhm.
right? And second is bonds. These are the
Okay.
I'm not getting into gold and arbitrage and other instruments, but I'm
Mhm.
speaking broadly where 80% of the investments take place are equity and debt. Equity is money that is invested in the stock market, which buys shares, stocks, all of that. And debt is investments that are invested, like I said, in bonds, government bonds, in debentures, in treasury notes, right? Fixed income instruments. A hybrid scheme is something which invests in both. It's a mixture, right? Generally, they have a balance of 50-50 or 60-40, right? Where they you also get some upside of the equity market, but at the same time, if there is a lot of fluctuation, it is immune from a high fluctuation because 50-60% of the capital of the money is also invested in debt funds,
Okay.
which are giving a constant interest. So it's basically a mix of your debt and equity is a hybrid
Okay.
scheme.
Okay. And what is the typically the rate of return which comes from a, if I were to compare the equity SIP, because now this is where the problem happens. When you have 3 to 5 years kind of horizon, let's say
Right.
5 years, you may be tempted to get into equity.
True.
Okay. And there may be a, right, currently what is going on right now. There was a huge bull run which happened in the market, but now with China, gaining back its foot, and India data is getting bad in terms of the employment, inflation, and all those things. I mean, it kind of not giving mixed signals and all. Then there is a war going on two fronts. So the market is, in this month itself, the Nifty has been has come down by 6.5%.
True.
So, and we have been talking about it. The overall P price equity of Nifty right now is standing tall at 25 or 24 maybe,
Yes.
and whereas the right P probably for a stock market maybe 16, 17,
Right.
and of not very hotly valued and all those things. So there may be corrections which may come. Okay, but what happens is typically when the market keeps going up, you just want to be there and you think that is going to just continue. That whole thing is
Yeah.
going to continue,
Yes.
continue. And then things, what happens is that when it starts coming down, or when it starts not touching the reality, then there is a panic mode where it starts, which typically happens because you may have invested your money with something very short sighted goal for that, and then you see that cycle is giving a different color altogether. So now can you talk about the rate of return of, let's say, a hybrid fund versus a equity SIP kind of return? And do index funds also qualify in the hybrid funds? I mean, can we take them also from the medium term perspective?
Or okay, so there are a couple of questions here. So first, let's understand what is the rate of returns that can be expected for a long-term equity fund,
Hmm.
for a hybrid fund, and for a short-term debt fund. So I'm not looking at the last 3 years or even the last 5 years. We have to always look at a time horizon of more than 10 to 15 years to really see what the investment has been doing over a decade, right? That's a true measure of any investment class.
Okay.
So in a long term, equity, if you see, has given 14 to 15% returns. Your equity SIP, your index, your Sensex, your stock market, basically a good portfolio. I'm talking about the large cap funds, right? Not the small cap. The large cap, your index Nifty 50 Sensex has given a 14 to 15% CAGR, which is a compounded annual growth rate, right? And this growth rate, like we said, it's not linear, it's fluctuating,
Uh-huh.
right? Last 3 years, people have got 25 to 30%, right? The previous 3 years, it was average 7-8%. But if you average it out, so if people are expecting that this kind of growth was going to continue, then that's something which you have to be careful of, because it cannot cross, forget last 10 years, the last 200 years of the US markets also, right? If you compare it to the real terms, if you convert the currency, the growth rate of the US market, the US market in US dollar terms has been a 7 to 8% CAGR over the last 200 years, right? That is the growth rate of return compared. And if you convert that into the rupee, it comes down to a 14-15% CAGR,
Okay. Wow. So
right?
14, 15 is what the moderate expectation from the equity SIP perspective is.
Yes. So if your portfolio in the last 3 years has been growing at 25-30%, I would recommend people, and I would say that please expect that over the next couple of years, the even if the portfolio is negative or it doesn't grow, it's absolutely fine. It is absolutely normal for the market to behave like this, because it will average out in the long run. So it has to average out. Number one. Number two, a hybrid return. Okay, so first let's come to debt. A debt investment, right? Now debt also is classified into different kind of bond ratings. Like a AAA bond would be at a 6-7%, which is your government bonds, your treasury yield, Indian government bonds. And then as and when the classification of the debt gets more and more riskier, right? Like a AAA is extremely is the most safe and least amount of risk. Similarly, a triple B or a double B or a triple B minus bond can give around anywhere between 9 to 9.5%, or sometimes even 10%. So now I'm talking about, so a debt mutual fund, the performance would be anywhere between, say, a 6.5 to a 9% in terms of, depending on the credit risk of the fund. So now if you take an average of them, right? If I take an average of the equity and if I take an average of debt, so a balanced mutual fund or hybrid fund would be anywhere between your 10 to 13% mark.
Okay.
But again, each hybrid fund also, it depends upon the kind of exposure they have in equity. Some have a 70-30 ratio, so they have 70% equity, 30% debt, and some are other way around, 70% debt, 30% equity. So it all depends on the asset class, on the mix, which of course is mentioned everywhere. So to summarize, a long-term investment goal linked to equity would be a 14-15% expected return. A short-term goal, debt would be between 6.5 to 9%, and a hybrid medium term, the expected can be anywhere between 10 to 13%. That's how I would classify it.
Okay, great. And where do you put index fund in this whole short, medium?
Yeah.
Can
So
devotees take index fund as the medium term strategy as well?
so Prabhuji, index fund is actually equity. It's pure equity,
Okay.
right? The Because a index fund is effectively tracking or investing in the index. In India, we have 3-4 indexes. I mean, the big index is Nifty 50 index. We have the BSE Sensex, which is of 30 stocks index, right? We have the Nifty Next 50 index, which is the out of the Nifty 100 stocks, the top 100 stocks. It's the top 50 is the 50 stocks beyond the Nifty 50 stocks. So any index fund is usually a pure equity fund. So I would rather than medium term, I would rather allocate it on a long term basis,
Okay.
because it is investing purely in the stock market. So an index fund, if like in the last 1 month, if the Nifty is down 6.5%, index fund also would have been down 6.5%, because it is exactly mirroring how the index market performs. The only advantage of an index fund is that it has the lowest expense ratio compared to investing in a mutual fund, and hence over a period of time, index funds end up outperforming a managed mutual fund.
Okay. Okay. Got it. Got it. Now, this was very helpful, Proji, and classifying this short term and medium term, short term, and long term kind of goals, and then hybrid fund for the medium term and debt for the short term, and the greater than 5 years, the equity plus index funds. That would be kind of good way to look at it.
Right.
But what we also see now is there are some other investment avenues kind of which are coming up. For the ultra short term, now we are hearing this. There are certain platforms where companies seek working capital. And they are you can invest some money, and then let's say Wipro is coming over there or Hindustan Unilever comes over there, and they take money for 3 months, and then they give some return of 12 to 15% or something like that, for the or 8-10%, whatever. The better the company, the lower the return and all those things. So we are also hearing about such, peripheral. Then, investment instruments. Then there is a blockchain or Bitcoin kind of thing also picking up. So I would want you to kind of also comment on this non-traditional ways of investing. Whereas I understand the SIP is traditional, and if you can draw some comparison to the traditional SIP, and I'll also put equity over there for timing. And I'll come back to that. Directly investing in stocks. Probably I'll come back to that later. But these non-traditional instruments, like when I told about these platforms of P2P platforms, and the bitcoins of the world and all those things, and vis-a-vis the traditional platform, like traditional ways like SIP and all. So, would you like to comment on that?
Yes. So is there a way I can share some, I have some infographics which could
Oh
be helpful
yes,
for this.
yeah, please do that. I mean, I think you have logged off from your system laptop. So if you can just log in over there,
I
keep
will
your
do that.
video, yeah, and then
Yeah,
we'll make you co-host there.
I will. So basically, what I was trying to come to, and it'll take me a couple of minutes, right? Is that please understand, okay, if investing, it's a serious business. You can't take investment as a form of entertainment,
Mhm.
right? So people, I understand that they are curious to know, okay, about Bitcoin probably, or investing in crypto, or like you said, even investing nowadays. Uh there are these many platforms like P2P lending, right? Peer-to-peer lending platforms. So let me put it this way. There is a basis for each and every investment uh, vehicle which is available, right? And our regulators trying to regulate as much as possible the investments that are available, especially in India. Firstly, please understand that if the regulator is trying to put some rules, right? They have the best of the best minds who are formulating these regulations for India. And if they've banned cryptocurrency, or if they've banned investing not, I would not say banned, but they have highly discouraged investing in Bitcoin, right? By giving it maximum taxation, and giving, and curbing banking channels to invest in crypto. There is a reason why they're doing it, right? Because they know that majority of the investors, they don't they end up becoming speculators and try to start going into the gambling zone, rather than being investing it as a long term asset class which can help them achieve financial freedom, right? Because we've seen time and again that the retail investor is ultimately left with the worst kind of performance, right? Because the big boys, the larger institutions, they they are the ones who take away the cream of the investment, right? And what is left is like, imagine if you've seen a sugarcane, when we go to a sugarcane juice, that if you see, when the sugarcane is put into the mixer, for the first time, second time, third time, ultimately whatever is left, and he tries to again push that entire sugarcane, whatever mass is left, and he tries to extract that juice. The fourth time when he puts it is what is the
Retail investor.
retail investor, what is left with that, with the juice,
Yeah.
right? That is if we end up trying to fall for these marketing gimmicks of these big large institution banks, where they come up with a new NFO, or when they come up with a new product, you know we have to be aware, we have to understand that it's just investment is a boring is a boring activity. You can't try to get, sorry.
Remember, you are stuck. Video is stuck, huh? If you are trying to speak, I don't. Hare Krishna.
Sorry, I was just trying to log it from the again system. I will add some couple of slides, to kind of showcase to the audience.
Yeah, yeah.
So yeah, so I was just coming back to how plain vanilla investment, where you where you look at equity or you look at mutual fund SIP for wealth creation, right? Of course, in our diet, how we have a balance. We have our dal, chawal, roti, sabji, right? Which is a nutrient balanced diet. Of course, once in a while we want to have something fancy. We want to have some Chinese. We want to
Discuss.
have some, but you can't, or dessert. But you can't have dessert as an entire meal, right? So as long as 80-90% of a portfolio is within, your normal investments, because ultimately they are the ones which are going to give you create the real wealth. Yes, it may be good to explore crypto or other forms of investments. But having said that, if somebody has time to dedicate full time into, say, a crypto kind of investment or peer-to-peer lending or other kind of lending, right? And you understand the mechanics, what goes behind it, like they say, open the bonnet and see the how it works. And if you understand the risks, right, then that's a different ball game,
Hmm.
right?
Right, right.
But if you are just going to spend few hours in a week or few hours in a month for investments, then it's rather better to just stay invested in the regular way and not try to experiment with the money, because ultimately you will be the loser with your own money, right? It won't be your neighbor. So it's better, yes, if you out of curiosity 10-15% you want to play around, that's different. People also understand, there's derivatives. People do a lot of FNO of late. Futures and options has gained a lot of popularity. So there are people who do this as a full-time profession, right? And then, so that's fine. But doing it as half knowledge, or doing it with the idea to kind of quickly make money, that is where the real problem lies.
Great. So this is very important. What you told about two very key important things or takeaways over here in the non-traditional versus traditional instruments is that no, a, you should have time, and time doesn't mean just no once in a blue moon I look at the platforms and do
Yes.
some magical investments and no expect some over magical returns. It's about very dedicated time you need to spend. And secondly, what you told is even if you have all these skills, time, and everything in your place, still it cannot go beyond 15%, 10 to 15% of your investment, because it can go down badly and then you will not.
I would say less than 10%, because there are many of these asset classes which are very new,
Hmm.
right? I will tell you personally, we saw there was a exchange, and this is in 2009. 2000 After 2009, there was a company. There was a very famous exchange called the National Spot Exchange,
Yeah.
NSCL,
Yeah.
right? And what it was, a commodity exchange where it was giving kind of a guaranteed return of 14-15% in terms of interest,
Mhm.
and in terms of investing in a particular commodity. And after 1 month you can withdraw it, and you get 1.2% every month. Those kind of schemes were coming. Almost all of India, I mean, they were managing more than, there was a point where they had more than 20,000 crores in their exchange.
Mhm.
And actually, if you understand, what was happening was a group of 9 people, they were just rotating money as a Ponzi scheme through that National Spot Exchange, and using commodity like, jute, and other form of commodities like aluminium, to kind of show that you can get that kind of return, because
Great.
of because of just turning the money. And heavily, heavily, every a lot of people, because overnight that exchange went bankrupt when the
Oh
Ponzi
my
scheme was
God.
opened, right? And a lot of people. So the downside, in trying to get that extra 2-3%, the downside is that you can end up losing your 100% capital,
Wow.
right? And Warren Buffett has three. It's famous. If everybody knows of heard of Warren Buffett, he has three rules of investment. These are and those are etched in his when you enter his Berkshire Hathaway office. Rule number one: never lose money. Rule number two, never forget rule number one, and rule number three, never forget the above two rules. So it's very clear that you don't want to experiment, because trying to gain that lost money is also an effort for your investment to then recoup the money. So it's
Right.
better to, like I said, yeah, I think I'm just going to log in again. So these are some basic.
Great. No, this is very helpful. I think your view on this traditional versus non-traditional instruments is really very helpful. Vrindavan though. See, one thing I wanted to also kind of, while you're bringing up your slide, one thing which I wanted to ask was more on the equity front now, uh, because there are, I mean, devotees who end up investing in equity. Again, I'll not say it's a non-traditional way of not directly going into stocks. It is definitely something which have been happening for quite some time. But what has happened in the Indian stock market is also with companies which are coming in who don't have even profits. PAT is not even positive, and their valuation is like skyrocketing high. I remember there was a IPO which came of Manpasand Beverages, and, and with Sunny Deol as a brand ambassador, and the company never existed also. So
Right.
there are a lot of unethical things also happening in terms of corporate governance now. Gone are the days like the TCS or the Infosys or the Reliance, and the only few companies and all this. But now what has happened is there's a frenzy amongst the corporates also. I recently heard that there was a IPO released by a Delhi mechanic, some shop or something, which
True.
was getting only there's three shops or something, and they've raised an IPO that got subscribed actually. So
Yeah,
uh,
in fact, they got a subscription of more than 4,000 crores for the
imagine.
IPO of hardly less than 15 crores, and with just three workshops. So this is extreme case of, you know like they say that. So there is a famous investor, I'll tell you. Um, I think whether um, it was Benjamin Graham, or sorry, Benjamin Franklin, right? This is in the 18 before, yeah, in the 1940s, before the Great Depression in America,
Hmm.
right? This America saw that time a crazy bull run, very very similar to this, right? 40-50% growth, right? Random companies getting listed in the stock market. And one day Benjamin Graham went to polish his shoes,
Hmm.
and the shoe polisher asked him, gave him a tip that, sir, this stock looks interesting. This IPO, sorry, this IPO which has come up looks interesting.
Okay.
He said he immediately went to his office and sold his entire portfolio,
My God.
right? Because he said that if a person, if like the the euphoria, if the euphoria has reached to a person of the lowest, sitting at the in the lowest end of the in the food chain, right? That means how inflated is the market and how much noise is there in this market, where a person who has absolutely no idea about what is stock market is just giving tips where to invest, right? And and this is time and again, every at the peak of every bull cycle, you'll start seeing, I've seen my Uber drivers, rickshaw drivers are trading on the apps, right? They're doing some kind of trading. So, which that, okay, now is the time when there is excess liquidity in the market, right? It's the valuations don't make any sense, right? The upside, look, you're against now, you're fighting gravity, right? If you know that the long-term investment return, equity return is not has been 15%, 16%, okay, let's take it with dividends, right? And if your market over the last 3 years has been giving you 40, not 40, but I would say 25, 30%, right? It's high time either you stay invested, you stay invested. If you don't need the money in the next 5 years, absolutely fine. You'll again catch the next bull cycle. And if your portfolio is down currently, is there's nothing to be disheartened, because it is natural. If the markets kept going up like this, then it is extremely fearful.
Mm.
And again, coming back to the saying, when everybody is fearful, that is the time to invest. And when people are extremely confident about the market, that is just time to be cautious,
Yeah.
right? So these are some basic things which time and again, and history will keep repeating itself,
Mm.
right? Where you should, so obviously, like you said, it makes common sense. If you're seeing some kind of investments, some companies which have a PE, a price to earning of 50, 60, 100. I mean, it's not sustainable. It's
Mm.
absolutely not sustainable to grow at that rate. So
Exactly. No, great. This is very good idea. So I think what you're mentioning is that even if one is doing equity investment, no, this is very important point which you told is that no, you should be really cautious when the thing. And I think over here also, as you rightly told, the auto drivers are also doing SIP. Everybody is doing a SIP only, and
SIP is fine. SIP is fine, but them giving tips and trying to trade, right?
okay,
Do short-term trading, that is dangerous.
okay, okay. So that at that level when it goes, then that means you understand that
Yeah.
there. Oh,
SIP, Prabhuji, is ultimate. I mean, in the sense, even at that level, if they can save 500,000 rupees a month,
hmm,
they will see the benefit of wealth creation over the next 10, 15 years.
okay, great.
And in fact, that has been one of our great story in the last 1 year. While the FIIs, which is a foreign investors, they have been constantly selling, right? In fact, in the month of October, it was one of the highest 80,000 crores of investments.
Two and a half lakh crore in October itself is what I read
Oh, sorry.
yesterday.
Then I'm so if that was the kind of outflow, had it not been for the retail participation which happened over the
Yeah.
last, our market would have been corrected by more than 40-50%,
Right, right, right.
which happened in 2008,
Yeah, after the
right?
Lehman banking crisis.
Yes. So it's great the kind of equity, the investments coming in SIP, right?
Yeah.
And equity is ultimately, by investing in equity, you are investing in the economy of the country, right? So that is what it is. But the moment you try to, you know, apply for this IPOs and pre-IPO and you try to make the quick money, that is where you can kind of,
Okay. Sure. So it has to be conscious investment with a proper vision and goal and everything, and proper research also. When you're doing an investment in equity, then it cannot be a hearsay kind of thing. You have to properly see the price
yeah,
to the no earning ratio, and how it stands, and then you kind of invest. So thank you so much, Roji, on
to,
equity part.
yeah,
And there are
to
a lot of
to
questions coming in
to
the chat group also. So yeah, you
to
wanted
to
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 show.
just say one thing about investing in what tips. So there's a saying that if you invest in tips, you'll be left with only tips in a hand.
Great, great. Yeah. So a lot of sayings in equity. I think people have become philosophers at least after equity,
Yes,
investment.
true,
Yeah,
true.
at least, and then rich also probably. But then, yeah, definitely a philosopher. Okay, great, Koji. So I think equity is done, non-traditional instruments done, traditional done, goal-based investing done. I wanted to. I mean, there are a lot of questions coming in the chat window, and I think devotees can put the questions in chat window. We'll not have much time probably, but we'll take some few questions.
Yeah.
One last thing which I wanted to know ask you to shed some light is we always hear this personality of people, you know on influence of the personalities on the way they invest.
Okay.
Now, like, no, is it really true? Or like, no, sometimes people say I'm so excited, no, I'm a risk lover, so I'll invest more, and I'm a risk averse person, I'll invest less on the equity part and all. So people get into more of their personality type. Whether that's a myth or a reality is what I understand, or it's just about the time horizons, and based on that, it's like there's a general prescription for everyone. Do you want to shed some light on that?
Yes, so this is always a constant, you know, kind of dilemma and debate between a person's risk characteristic or their risk profile versus the kind of investments that are done,
Mhm.
right? So now there are two ways of looking at it. First is, if, like I always say, that it is about the time horizon that plays more importance, right? Even if you are a risk averse investor where you cannot tolerate looking at, you can't see your portfolio even go negative by even 2%,
Mhm.
right? Fine, you may be a person who is very, very safe, very, very conservative. Okay. And but sorry, let me put it this way. But as a financial advisor, or as a financial doctor, right? It is my duty to give you the right medicine. And the right medicine is, we know that in the long term, if your term time horizon is more than 5 to 7 years, then I would highly recommend and suggest to invest in SIP or equity or mutual funds,
Okay.
right? Because we know that debt investments are actually, if equity is volatile and risky, but investing in debt is a guarantee loss. And,
Okay.
and let me explain how it is guarantee loss, right? If your money is parked in a fixed deposit, your fixed deposit is giving you probably 7% return, right? What is the inflation of India?
Yeah, roughly around 8.5, 9%.
I- I'm saying let the inflation also be 7%. Let's take it 7%, right? Your interest income is 7%. Inflation is the value. We know the currency depreciates year on year, right? Whatever was 5 years back, what we were spending on ourselves is has gone. Now we're spending double of that to maintain the same lifestyle. So that is inflation. And if you add the factor of cost, sorry, your tax, your 7% interest return post tax gives you only 5%,
Okay.
right? Now your real money, your real growth has not happened because inflation has been 7%, but you actually earn only 5%. So
Mm.
your money has technically depreciated by 2%, which is a guarantee loss.
Right, right, right.
So that is what so when we speak to our investors who are even risk averse, or I would say conservative in their risk profile, right? We explain to them, we educate them that a short term investment or a investment in debt, you can 100% investment in debt is actually not creating wealth for you.
Okay, great. So I think what your point is that no personality and wow, which essentially boils down to one's liking and disliking and prejudices and biases and whatever you may call, is actually not so important. But what is important is looking at the horizon, one's needs, and accordingly investing and educating oneself more with the data rather than some emotions. So that's a
Right.
good point, Proji. And I think now I'll just turn to questions. I
I'm
think
just, yeah. So
yeah,
this was one of the, when we were talking of the slides.
yeah, yeah, yeah.
So this is, if you can, I don't know if people can see. So we have mapped it. This is with respect to mutual funds, right? What kind of mutual fund can be invested in if
Hmm.
it is less than, depending on the time horizon, 1 year, 1 to 3 years, 3 to 6 years,
Okay.
6 plus years, and 10 plus years. We've also gone to the extent of looking at 10 plus years. Wait, let me just increase my screen.
Yeah, you can put in slideshow mode. Acha, okay, this is yeah, slideshow mode if you can put in.
I am using actually
Yeah, this one on the top right. If you see slideshow is written beside share.
besides share. Yeah, yeah, yeah. So just to read it out loud quickly, if your goal, or if your investment horizon is less than 1 year, you know, you can just leave it in a liquid fund, or say, even a FD, right? Because it's better than leaving in savings account, because savings account hardly gives you, any return. But unfortunately, Prabhuji, while you're smiling, we still see there is a statistic which shows that still 15% of people's money is just left in the savings account, right?
Hmm.
They don't even, they don't know where to invest, to just leave it there. And that is the worst thing, because your savings account is the most liquid, and people then end up spending in places which are not meant to be spent.
Hmm.
Coming back, your short term is 1 to 3 years, which you were talking about, debt fund. It could be whatever small goals, short term goals that are there. Medium term, in this case, is 3 to 6 years,
Hmm.
where we spoke of hybrid and balanced mutual fund.
Okay.
Anything above 6 years is a long-term goal,
Mm.
right? Where we look at diversified equity mutual funds, index funds, which you brought up. And if you know that I don't need the money for the next 10 years, right? That is where then we recommend investors to go into a more specific kind of investment class in mutual funds, which is small and mid cap stocks, because those really give you high returns, and the life cycle of a short and medium term companies are 8 to 10 years. So that's where that gives you, and that can give you 18 to 19% kind of return over 10 years. So this was one slide which I wanted to share. Yeah, now we can take on any investments. Sorry, any questions that are there.
Okay, sure. No, thank you so much, Roji, for this. Slide also serves as a summary of what we have discussed. I think I'll take some questions on the group. I know I'll not be able to take all, and there are some questions on equity. One Prabhuji is asking, thank you, Prabhu, for the session. Just small question. Currently, the market is down and my entire stock portfolio is in negative. Lakhs. Thought to hold for 4 years, but losing the patience now. What do you suggest? I think your session has really answered that thing, right? More than 5 years when you're getting into.
Yes. Okay. So again, I'm going to let's please understand equity market in India or equity market in the world, right?
Mm.
The basic characteristic of equity market will remain the same. So to
Mm.
answer Prabhuji's, again going to share, like this pictures speak 1,000 words. So I'm again going to share one slide for the benefit of the people, right? So this slide is the 200-year history of the American stock market,
Mhm.
right? The Dow Jones was the oldest. Now, while people are seeing a temporary correction, right? And if I can, if the question was that if your time horizon is for more than 4 to 5 years, then I would say it is nothing to worry, right? Look at every correction. The biggest correction which you see here is this is the Great Depression we spoke of, where the equity markets in the US corrected by almost 90%, right? Of course, it took time to recover, but ultimately they did recover, right? Or you look at the 2008, you look at any crisis, there will be correction, but please remember that in the long run, your equity investment will become a 14-15% growth. So unfortunately, if you have just invested, then it may take time for you to recoup the investment. But if you stay invested, right, you will definitely get your return, which is a long-term equity return of 14 to 15%. That is what I would. That's my suggestion. So don't again. Okay, one more slide. This is if you look at your investment in 5 days, it will look like this, very very wavy, right? But over a period of 5 years, it will look up. Okay, I have many slides. Wait, I'm going to show you one more slide of how equity market. This is your India. This is your India growth rate. If you see, it has grown by a 16% CAGR. The 16% here includes the dividend yield, which is an average 2%, 1.5 to 2%. So yes, the nature of equity market, please understand, it is volatile. Volatile does not mean risky. Volatile means it is not linear in growth. But if you stay invested, it will give the kind of return that equity is supposed to give, right? That is what it is. And another slide. Okay, I don't think I have it immediately. But yeah, okay, this one. This is the last slide. This is a slide of one of our investors. He kept looking at his portfolio every day, right? And it looked extremely wavy. But if you look at your portfolio every 3 years, see how smooth the graph is.
Okay.
So there is a statistic which says that the number of times you look at a portfolio is inversely proportionate to the gain of your investment. So just fill it, forget it, is the mantra, you know.
Okay, great. Thank you, Proji. I think this was really good. I think it answers a lot of questions. And I think what you are saying, it also takes care of the geopolitical situation because they have been there all through, right? I mean, we have never had a time when wars were not happening or, pandemics were not there or depressions were not there. So it is irrespective. When we are talking about this 5 year term or more than 5 years, kind of 6 to 10 years, it
Yes.
includes all those things. So we should not take an exception what is happening right now, right?
Yeah, we should not take it. We should not be discouraged. Rather, if your time horizon is long, it may be a good time to invest more, and start averaging out your investment, provided your investment is for the long term.
Great. So now, Proji, another question. So somebody is asking that after 3 year of investment, if index type of fund has given somewhere 20%, then it is better to withdraw and reinvest. For what would be the right strategy, right? I mean, and this is again very important thing because if
Yeah.
we continue more, then it can drop to 15%. So most probably as per last study. So there's a devotee question. Okay, so what should we do?
So in this, one good strategy is to liquidate 20-30% of the portfolio, or you can also liquidate 50% of the portfolio. But the money, say you invested 1 lakh. The 1 lakh over the last 4-5 years has grown to probably 1.5 lakhs, right?
Mhm.
You can withdraw the growth amount. Some people just withdraw the profit that has been accumulated and reinvest that into SIP mode. So you don't miss out on the growth, right? So you can book some profits, or you can withdraw 50% of your portfolio, and again, instead of seeing a good drop, you again start putting it into SIP mode, or for some active investors, they buy on an every dip. Every time the market corrects, they purchase more. Every time they correct, and then once it has grown by 20%, 30%, you again withdraw it. Of course, this is a little active form of management. It's not recommended for a passive investor, right? But if you feel that you have got the goal, and if this money, we're talking of goal based investing. If this money is linked to a goal, and if it is come to the amount of money which you require for the goal, then you might as well withdraw it.
Okay, great. Now, very crystal clear advice, Proji. Now, one question is it good idea to opt for fee only advisors?
Yes, I would recommend fee only advisors, because a fee only advisor is like a doctor, right? They don't have any vested interest, or they don't have any conflict of interest with respect to a person who earns commission, right? uh because fee advisor he's getting paid only for his fees. I mean, sorry, he's getting paid only for his time, right? So he will not have any ulterior motives to sell you a wrong product which has high commissions. So if you have access to a fee only advisor, that is recommended, because the advice will be unbiased. It will be in your interest only,
Very
right?
good.
So that, yeah, so I think that's what.
Great, great. Thank you, Proji. I'll move to the next. I think we'll make it quick because I know we are already up time and you also have a tight schedule. Can you please put light on systematic withdrawal plan and RBI gold bonds? And are they medium or long term investment? I think you addressed about the gold bonds, how it is, it is more like short term kind of.
I
Yeah.
would I would put I would put gold as a medium term investment, because in the short term it can again be,
Okay.
it can correct, right? And RBI gold bonds or the sovereign gold bonds are a good investment, because other than the growth of the gold, the rate, the increase in the gold rate, you also get 2.5% interest every year. Plus, over a period of 7 years, at maturity, they're also tax free. So that is definitely a great option. Again, gold cannot be a large chunk of a portfolio. It can be 10-15% of a portfolio,
Okay.
because gold as an asset class will always be equal to your inflation. That's how gold has been growing. Of course, it's not the same timing, but average return of gold is equal to the inflation of any country. And the other question was about SWP. SWP is a tool. Is rather than an investment, it's a mechanism tool to withdraw your money in a systematic manner. So if you're retired, or if you want a cash flow every month from the investment that you've done, a systematic withdrawal plan is very helpful in that aspect.
Okay. That's a good one, Roji. So what's your view on momentum-based Nifty strategic indices like mid-cap 150, momentum 50, better than actual active
Yes. So yeah, in fact, of late, if you have heard of this quant mutual fund, they have
Hmm.
so they have come up with momentum based investment. It is definitely an asset class that can be considered. While this concept is it's quite new, I would say it's just a 2 3 year old concept, but it is something to watch out for. It's too early for me to kind of give any kind of comment immediately. But personally, we are also investing in momentum based strategies because they bring in an alpha over and above a normal equity or index fund. As of now, that has been done. But please understand the momentum can go both ways. When the momentum is rising, it will give you the extra return. But when it starts falling, then it can also have that kind of negative return impact on a portfolio. So
amplified impact? So
amplified
that,
impact. So I would rather say it's better to wait and watch.
hmm.
You can start having some investment in these kind of new hype, new kind of alpha generating schemes, right? But only time will tell.
So can we say that it is good in long term, or I mean, whether long term, short term, it is more about the discovery of instrument, which is more important.
I would say more of the discovery
Hmm.
and again long term. Anything, yeah, don't for short term is better not to, you know, kind of play around with something new.
Okay. I think somebody is also asking your view on consider investing in insurances, term insurance. And I think that's a good point, which I think I got. I mean, it was missed in our discussion, but people get into the insurance plus investment mode and they end up, So can you talk about insurance versus term insurances specifically? What they can go for, etc. And should they mix with the endowment plans and all? Yeah.
So again, please understand. Do you know who is the biggest investor institution, which is the biggest investor in the equity markets in India?
LIC.
LIC, right? So please understand that all your insurance money, which LIC is collecting, ultimately they are also putting it in the market. And like I was saying, that the end investor is left with the fourth, with the those few drops of the Kanneka juice, which kind of comes in the end, and the big institutions take away the the cream. So the people have understood that if they are just giving out in endowment plans and in some of these money back guarantee policy plans, the what you're getting back is 6%, 8% in these insurance schemes, right? And for the insurance company, they are technically getting money at a very cheap cost, and they are investing in equity market which is giving them 14 15%. So you can understand that they are doing a clear cut. They're giving you the least amount of returns. However, there are certain amount of insurance products which are called ULIPs, right? And since the time IRDA and SEBI have brought the charges extremely down, right? Up to a certain amount of investment, I think up to 5 lakhs, right? It may be a good idea to invest in this in the ULIP plan, which is linked to the market, again, which is long term. Why? The only reason is because at withdrawal, right, it is tax free. Unlike equity investment long term, where now you have to pay 12.5% on long term gains, there are few insurance products which are linked to the equity market. It's as good as investing in a mutual fund, right? And the benefit of that is that it gives you a term insurance and also gives you when you redeem your investment, it is tax free. So up to 5 lakhs of that investment in a ULIP plan is can be considered.
Okay, great. So I think there are a lot of questions, Moji, but I think we'll have to take a pause here. It's already over time, and I want to let the audience also know that no, we'll have another follow-up session. I can see a lot of questions, and that can be a purely dedicated Q&A. Maybe after the Kartik Yatra, once all of us are kind of back,
Yes.
we can plan another follow-up session for this. So, thank you so much, Prabhuji.
No,
And
I'm thankful.
and this is like, no, I mean, Prabhuji is of course, giving his advice from no from his experience, and of course, he's a professional, in this area. And I would want that all of you also. I mean, one thing which is, it's your money, so be very careful when you are investing. One should not practice, blind faith in any which way. So please, do your own research, do your proper this thing, and as go ahead with your investment plans. Okay, so it is obviously like, no, it's going to be, it should not be like, no, okay, I heard like this and this is what it is, and the reality, because reality is always going to be different. It keeps changing. Okay, so I think, where is Prabhuji gone? Nan Prabhu is, I think he got disconnected or something. Sachin bro, can you just ask him to rejoin?
Sure, Prabhuji. Yeah.
So thank you so much. I think some questions still remain. You can send your questions in the group, and then we can pass it over to Vrindavan Prabhu, and we'll be putting his questions, putting the answers to his questions in the group also. Okay, that we'll try to do. Okay, so thank you so much. Vrindavan Prabhu, you there? Oh, okay, great. So thank you so much, Prabhuji, for your time, and the fact that so many questions coming up, it can flow till evening. Actually, I can tell you for sure.
So I'll be happy to take these questions.
Yeah.
I mean, whenever offline, or
Yeah,
we can create a separate, we can summarize these questions and we can have a separate session post Kartik Yatra.
yeah. What I'll do is, I've asked them to put the questions in our group, in our Nityanand Sabha group, and I'll be sharing these questions across to you. And if you can audio record your message, that also is good. In response to these questions, that will be really helpful for devotees over here.
Great.
So thank you so much, Prabhuji, for giving orientation and giving some very valuable advice on your experience, investing experience, and helping so many people in their investment journey. We really look forward, and he is on LinkedIn, so you can check his LinkedIn profile, and that will really help all of us. Okay, thank you so much, Prabhuji.
Thank you.
Hare Krishna.
Hare Krishna.
Thank you once again for coming to Nityanand Sabha once again, and we look forward to have your association more often.
Thank you.
Thank you. Hare